Welcome. I'm so excited to be able to talk to you today. Can you tell me a little bit about yourself?
Yes, thank you for having me. So my name is Juliette Richert. I am a senior analyst at the Artemis Fund. We invest in female-founded tech companies, modernizing and democratizing wealth via fintech, care tech, and commerce enablement. The fund was launched, and our first fund was launched in 2019. I joined the team in 2020, and now we're on fund two. And so I've had experience as an operator working in operations at one of our portfolio companies, Good Find, which is a payments platform for mobile businesses, and have been in VC otherwise.
Nice. How did you decide that this was like the space that you wanted to work in? What got you excited about venture
Yeah.
capital and funding, and specifically funding in women-led companies, which is kind of the focus of your guys' fund?
Yeah, totally. So I kind of fell into venture capital. I had my first internship at an oil and gas company called Equinor and their corporate VC arm. And I don't know how I landed that internship. I had no idea what VC was. I had no understanding of how investing in high growth companies worked, but I loved it. And I was in Houston, and the scene was really starting to get its feet under it. And so I was spending a lot of time in different community groups and getting to know founders and other investors, um, all through upstream oil and gas tech, which is not anything that I was previously interested in.
Yeah.
And so I came away with that from that experience. I was like, wow, I love that. That was so fun to work with all of those entrepreneurs. They are so innovative and tenacious, and the energy is incredible. But I don't want to work in oil and gas. That's the corporate world was not for me. And so I came back and was thinking. I took a couple classes in after that in innovation and entrepreneurship, and then was connected to the partners at Artemis through Rice, as they were establishing Fund One. And I started doing like data entry, really kind of menial work. But working at a fund that early on, I mean, it's like working at a startup. There was so much to do. And so I started picking up different responsibilities and really got to grow with the team throughout Fund One. And I decided I wanted to stay because I think the work we're doing is so important to making sure that women have access to capital. But also, when women have access to capital, it's not just like an equity thing. They're building companies that are like going to change what both like, research and financial opportunities and all of these things in the larger market look like. And so there's the sort of secondary ripple of the work we're doing. I also believe that our thesis isn't just about impact. It's not just about doing the right thing. But female founders outperform all male teams when it comes to ROI and speed to exit. And so I think we have a really healthy thesis when it comes to returning capital to our investors too, not just, doing good.
Yeah.
Um,
I think
yeah.
that's one of those things that it's sort of like often investment in female founders sort of led with, this is a thing that would be fair. But when
Yeah.
somebody is thinking about like, you know, deploying capital, you have a fiduciary duty to have a return on investment. And
Mm-hmm.
so it's not about, what's fair or what's right or what makes the world a better place. Um, it's about the return on a capital. And so it's like, I think by itself, often like you could just look at investing in women as a thesis by itself. That sounds very unfair in that sort of
Yeah.
way. But the reality is that the capital is well spent and well managed. Like there's less chance of being defrauded, and just all of the things, not just, that they, companies that at least have, I saw one statistic, it was like, if you have at least one woman on your board, that the company does like 30% better. And so it's like, how is that not just sort of like a blanket thing? But I think it kind of gets back to this idea that if a woman finds herself in a place so she can execute on a company, or is in a position where she is being elected to a board, that she's just had to strive so hard to get to that place, that she's just an excellent leader, because of the strife that she went through. And it's not just sort of like because women are innately better at management, or the management of capital.
And I think so much of when we think about progress for women, especially in like the professional space, it's like it's a fight really for us to be average, right? We can't be where we are today and be average. But that's, other people do it all the time. And so how do we get us there?
Oh man, if we just had to, do only what the other half had to do,
Yeah.
all the other things, then yeah. So true. I love, we actually have a co-investment. I invested in Mothers and Work.
Well, working mother. Yeah.
Working Mother.
Abby.
My dyslexic brain just flipped the name. I love that one because it's this idea that we're creating a comfortable workspace for women to continue work, and they don't lose out on their job or job security, because they end up being the primary caregivers often. So I love that investment that we have. What are some of the things that you're excited about right now? I know the market has been really funky, but what do you?
Well, I'm really excited about a company we invested in this year called Max Retail. Kind of fits into our commerce enablement umbrella. They enable small brands and boutiques who have excess inventory, it's holding up cash flow, to liquidate or sell at wholesale cost their inventory. And this is something right now that like large brands like a Zara is able to do because they have so much inventory that they can sell it to a TJ Maxx or a Nordstrom Rack. And small businesses have never had the opportunity to do that. So Max Retail aggregates all of that inventory and presents it to these larger buyers, in kind of a bigger bucket. And I think this is really exciting because coming into next year, I mean, we're already feeling these sort of recessionary pressures. Small businesses are suffering and need tools to make sure that their businesses will be sustainable. And at the same time, like consumer retail habits are changing, right? We're pulling back, we're buying more discount, we're being cautious of how we're spending our money. And so Max Retail fits really well into both these like upcoming consumer trends and gives these small businesses a little bit more of a cushion going into the next year. I mean, across the board, we're kind of seeing some downward pressure on valuations, especially coming out of last year, which is, that's good normal for us. Yeah, normal. And I think that going into next year, we're expecting to see even more of that. And at the same time, a little more capital demand from founders. So I think that'll create an interesting dynamic where there's like a flood of founders raising and some pretty conservative investment practices. So maybe a shift in the other direction.
Yeah, we were definitely in a founders market until this year. And then we saw that shift where we were seeing these extraordinary valuations, where it was honestly, it was very difficult to price a company because they weren't fitting with any of the market norms. And which always makes me actually pretty nervous as an investor, because I sort of follow some of Warren Buffett's principles around investing, where I'm looking for a high quality asset that is priced well,
Yeah.
or at a good, at a good price for an investor. And so when I'm seeing something where it's sort of this driven by FOMO feeding frenzy, I'm like, I'd rather take a beat and wait, and then deploy capital again when the market is in the investor's favor, which I think currently we are in.
Totally.
And one of the pressures that I definitely have seen and have been trying to figure out the right path forward is new regulation that came out around crowdfunding, called CF funding, Reg A and Reg D. And so this idea of general solicitation, which looks like a lot more like the ICOs of like 2017, you can go out and sort of get a feel for the market and see if people want to invest. And then the ability for basically founders to raise capital in the CF up to 5 million, and then Reg A, Reg D all the way up to 75 million, which I think really displaces a lot of that early stage capital needs, and it pushes up the valuation. So I think one of the reasons, like maybe the early stage, seed to A round companies, we're still seeing are still getting funded and stuff like that. I think we're still seeing that uplift from the crowdfunding space. But I'd love to get your thoughts on what you think is going on with the market and why we're seeing down rounds and priced, after A, but we're still seeing up, or unless you're seeing something different in the market.
Right. Yeah, no, I'm curious too, I'm less plugged into the excuse me, the crowdfunding dynamic, but would love to learn more about what you're seeing there. I think that at the beginning of this year, we saw, people reacted to the public markets coming down. And so we saw like later stage companies having a hard time raising at those insane valuations. And it took a little longer for it to trickle down to Series A and seed. And so I think that like we still haven't seen a complete adjustment back to pre-2021 levels, both at the seed and Series A. But I also think that with the work that I do, we're working with only female founded companies, which is a different dynamic than the rest of the market, because female founders across the board raise smaller rounds and have lower valuations. And so while some of our founders were well, some of our founders were able to like ride a little bit of that wave, right? Not as much as some other people, especially like Web3 fintech companies, because that's not, we invest kind of in some other ones. We had one of our companies, Neighbor Force, which is they deploy community members into homes of aging individuals to help with non-medical needs, like running errands or cleaning your house, or just like, social determinants of health, like
is that
hanging
like
out.
considered silver tech, or what?
Okay. I guess that's in the silver tech space. They have an actual product that everyone, people don't stop getting old.
Unfortunately,
and so
unfortunately,
not yet.
That's working on that, because I'd love to invest.
Not yet. What we saw with them is they had a need that was consistent, if not heightened by like the pandemic, and people are more aware of it. And so they were able to raise a really healthy A in this market. But they didn't benefit from the hype of 2021. I don't know if that is an insightful perspective.
Yeah, that's helpful. It's sort of like, as the market's sort of like adjusting and people are figuring out, are we in a recession? And if so, how bad? And what does that mean? But at the same time, a lot of people don't understand the basic mechanics and structure of venture, which is you form a thesis, and then you raise capital around that thesis that you typically plan to deploy over 3 years. And then that investment vehicle, you wait for those assets to mature over 10 years, and sometimes you have a 2-year extension. And that's, so it's like you have the funds, or you have commitments for those funds. And so even though the market might be pulling back, there are more VCs now than there have ever been. There's more capital that's committed to VC than there's ever been. And yet the number one complaint I'm hearing from founders is that they have a solid company with revenue, a product ready to scale, and that product market fit, and they can't find enough investors to fill up their round.
Yeah.
And so now they're pushing down their valuations and things like that, which I think a lot of investors are definitely like times on their side.
Yeah.
And then, one of the other characteristics a lot of founders don't know about is just the seasonal nature of
Yep.
venture capital, which is you you don't typically hear from a VC until that maybe first or second week in January, after like they get back from the holidays. And a lot of times they write their last check by Thanksgiving, because
Yep.
everything else after that is maybe just following up in paperwork, but they're not going to be deploying checks in December typically. And the same characteristics happened around August as well, where the summers can be very, very slow, and then the sprint to Thanksgiving. And so we're coming to Thanksgiving. It's happening
Yep.
soon. And so, if a startup hasn't had, built that relationship with a VC, they're probably not going to get a check. And so trying to have those sort of conversations with founders is also interesting. But
Yeah.
I'd love to hear more about, what are some key characteristics you look for in founders? What kind of checks do you like to write, or what rounds do you guys like to look at? And, other things that can be helpful for women as they're looking to raise capital.
Yeah, totally. So we're focused on the seed stage. Typically we lead. Our average check is $1.5 million.
Oh, okay.
And so part of our thesis is, and we have a fairly concentrated portfolio, 15 to 20 companies, because part of our thesis is not just, we're investing in female founders in fintech, care tech, and commerce tech. But we think that the value that we bring is so much more than just a big check. A big check is important, but it's a network. And so we are always, always, always thinking about how do we grow our network of experts and potential advisors or high level talent in the areas that we invest. And we do really active fundraising for our founders too. And so building the right seed and Series A relationships for our founders to really be able to raise, because you can have lots of small checks, but the power of an institutional lead, especially one who is going to fight for you and raise for you and all of that, is what women need in a disadvantaged system. And so that's where we see ourselves coming in. That said, we are looking for founders who want to work with investors. Their investors will take our feedback, will come to us with questions and problems. And we're also looking for incredibly resilient founders. We've invested in, I don't know how many immigrant founders, but it's just happened that way. It's because we really prioritize investing in people who have gone through hard things, have had to adjust, and have been able to pursue a goal without hesitancy, with that strong resiliency. And then of course we're looking for an expertise in the market that they're innovating in, and a strong understanding of not just their go to market, but the barriers of going to market. What are the things that are going to trip you up, and like how are you going to prevent that or get over that? And so yeah, that's what we're looking for in our profile.
Yeah, one of my number one red flags is when a founder is like, I have no competitors. I'm like,
yeah,
please don't tell me more. I'm going to walk away very slowly.
Yes. Back away.
I'm like, that's great. You keep working on that. I'll see you later.
That's
Yeah.
awesome.
Oh my goodness. That's so true. I think that, grit is really important. And I think that's something that women naturally have, because I saw this quote recently. It's like women were born into pain. So it's like we just end up doing a lot more reps around
Yeah.
the management of discomfort, because our whole life is sort of discomforting sometimes.
That's so true.
And so for us, it's just sort of like water off the back. And, we're, as a group, making broad strokes here, of course, but it's like community builders, and we believe in nurturing and growing something versus sort of like some of the other approaches that I've seen, which aren't as much about that. It's about competition, and it's about cutting away. It's building up.
Yeah.
So I love the characteristics of female founders.
Yeah. And I also a trend I've noticed is that maybe most is a broad term, but a lot of female founded companies are innovating with the mission and impact in mind, which is another important characteristic to us to be able to track the impact of our companies. And I think that's because a lot of them are solving really real problems. Like, how do I take care of my aging parents? How do I save for my child's future? Like, really things that we feel a lot. And they're solving them from the pain point of having had to do this. Most caretakers are women. And so it makes sense to invest in women who have had to take care of aging parents and children who are solving for those problems.
That's true. I think that that's sort of been one of those other issues why I'll back up a little bit. So it's like one of the issues that I've seen as an investor, and specifically going out and saying I'm going to invest in female founders, is it's I'm trying to think of the right way to say this, but it's like one of my big worries is that even if, I'm seeing all the rationale, like I'm like, you have an incredible product that has a great market, you have the knowledge, you got the grit, you got the network. I just know how hard it is for them to close on checks. That everybody else is going to, instead of look at the true potential, like what our job is as VCs, look at the potential first, and then look at the risk, as they flip it and they look at the risk before they look at the potential with a female founder. And so it's like, even when I've written a check for female founders, it's thank God they have so much grit that they keep on finding a path forward. But it's like, I just know that they're going to struggle so much more to get more capital in, which makes me mad and breaks my heart. And I'm like, and it also makes no sense.
It doesn't make any sense. And I hope that we keep seeing, women who started their companies 10 years ago go public, and like there's more attention around I know there's been some attention, but there's more now. And I hope that we see more examples of women closing really big rounds or having big exits or going public. And it's a small piece of the pie, I think, but maybe that will help people unlearn some of that really internalized bias it's so difficult to keep in check or even realize. But
that's true. It's like when women are, I think currently the statistics are about 40% of companies founded, and to be fair, a lot of the companies founded are targeted at a smaller market, simply because women bootstrap their companies. They don't think that they can get funding from investors, which has historically been very true, where what was until recently, I don't know what it currently is. I know a lot of more women have gotten funding in venture capital. It went from almost nothing to, is it 9% now?
I think like for teams with no male co-founder, it's still hovering around 2%. For teams for gender diverse teams, it's
so you're saying around 98% of the time.
Yes.
There's a chance.
Well, and those numbers are also reflected in people making decisions around where capital goes. I saw something, and this number blew my mind, that 98% of venture dollars are controlled by men. And you have decision makers or even funds like ours, but we're smaller. Like the people controlling the large sums of capital are men. And it's just directly, it's reflected in how capital is deployed to founders.
Yep.
Yeah.
That's very true. There's this unconscious bias that occurs when, especially in the early stage, because when you're doing this early stage investment, a lot of times whatever their business plan is or their deck says or whatever the founder even thinks, the reality of their company within even a year or 6 months will be very different than what they pitched you on. So it's like what you're really investing in as a VC or an angel is the person in front of you. And I think just like what you said, it's these characteristics of people that will keep on getting up and keep on trying when it's hard. And so it's that grit and intelligence and integrity, and this desire to keep on growing and pursuing this thing that they're deeply passionate about, and it coming from a place where it's not just about them. It has to also have this bigger purpose and meaning behind it, because that can give you the strength to get up even when you're tired.
Yeah. I was talking to someone and they referenced a study, but I don't know the study, but around how successful women always have a network of people around, like a small, close circle of people around them, usually other women. And that's how successful women build their network and have that cushion, I think, that support system and really circle of advocates. And it's much harder when you don't have that, to grow a company, to make the right connections. And so like really leaning into that close network of people who will not just like support you, but advocate for you.
Yeah, I think that's true. I know in my life that every time I've had a failure, I end up calling a close girlfriend, somebody else typically that has success within their own domain, and I bitch about it. And then they're like, Jenna, you got it. And you can go try again. We believe in you. And it's sort of like this idea that, because you need other people around you that not just believe in you, but also are successful within their own domain and or successful within kind of the so you have that camaraderie, and they can understand, at least from the place that you're coming from. And I do believe I think it was Tim Ferriss that did that whole thing about you become like the average of the people that you spend the 5 people you spend the most time with. I think is that maybe him who said that. He might have taken that from somebody else,
but that's really familiar. Yeah.
But that's sort of this idea that we become the average of the people we spend the most time with. And I think it's really important too for women to be thoughtful of where they get advice from, because advice that is generally geared towards a founder is geared towards a male founder, and female founders face very unique challenges, not just in leading their companies, but also in like raising capital. And it's male founders aren't being propositioned by investors at the same rate that female founders are. And so being able to handle those things, and it's not just like, it's also on the pushback and other sort of things where it's like, where if a male does it, it's seen as a positive signal, but socially, as a female does it, it'll be seen negatively. So being able to navigate the complexity of doing something that might be seen, at least in the past, as antisocial. And we're all still holding the legacy of those social beliefs, even if on the surface we don't want to. We still have all those other things that are built into sort of our collective unconsciousness that we share culturally.
Yeah, definitely. And I think part of that, especially in the early stages of your company, goes back to why it's so important to be authentic with yourself and the people you surround yourself with. And so like building that circle from a place of understanding who you are and what you need, and not worrying too much about coming off as right or perfect to anyone, because that creates a whole nother kind of set of anxieties and worries that just have never worked well for me.
Yeah, I 100% agree with you there. What do you do to build community for yourself, and kind of what do you do to nurture those relationships? Because I know it's like when you
Yeah.
have a high-paced job or you're building your company, like it can be really difficult to nurture those relationships.
Yeah, definitely. I'm really lucky in this work that I get to spend a lot of time with incredible people and in the space. And so that has been huge for me. At first it's been just a kind of like meet everyone I can, right? And now I'm in that phase of understanding who will advocate for me and who do I want to put time into a relationship with. And that's been a really thoughtful process for me, where I've tried out lots of things and met lots of people, and see how they feel. And so for me, it's a process of making friends. It's more friends than building any sort of network that's going to serve me in a specific way. And that personal connection is really, really valuable. I think it makes a more sustainable relationship, and it also serves you in a more holistic way than someone who's just going to, support you professionally. Yeah.
Yeah, I
And
agree with that. It doesn't need to be it probably shouldn't be transactional.
yes, exactly. That's exactly what it is. Um, and I hate to do this, but I have to run to another call. Um,
Thank you so much for your time and chatting with me about the market and your thoughts on investment. I really appreciate it.
Yeah. Yeah. Thank you too. This was wonderful.
All
All
right.
right. Have a good
Great
one.
day.
Thanks. Bye.
Okay.